And trade was one of the issues that we heard a lot about this earnings season. But as the third quarter earnings season winds down, what did we actually learn? Joining us is Matt Maley. He's the Chief Market Strategist at Miller Tabak. Welcome, Matt. Nice to see you again. So,
thank you, Sue.
What was your big takeaway from the earnings season this time around?
Well, two things. Number one, it wasn't that great. It started off very strong and looked like it was going to be really good. But in the earnings season, they beat expectations. But of course, they always beat expectations because they lower them so much. But the guidance coming out for the fourth quarter was disappointing because it came down again. We're now looking for basically a slightly negative growth for fourth quarter earnings. That number was 2% growth 2 weeks ago. And back in May, it was 11% growth. However, on the flip side, you look at forward earnings going a little bit further out into for the first and second quarter. The second quarter went from a 7.7% growth down to 7%. Not that huge decline like we saw for fourth quarter growth we've seen in recent months. So, we're going to have to, we're still kind of in the show me stage, especially given how much the stock market has rallied. But right now, it's not something we want to, stick a flag in the ground and say this is a fabulous earnings season.
We are getting those mixed signals about the rollback of tariffs, but assuming that were to start happening, how would that impact those earnings down the road, do you think?
The one problem we have with that is that the rollback there's no question it would be positive, especially for the consumer, and they're the most important part of our economy. But what does it mean for corporate executives? Does that really lift the uncertainty surrounding a more comprehensive deal? I'm not sure that it does. So I'm not sure that they're going to spend in the way that will really help the economy grow in a major way. So it's not as good as I'd like it to be if we had a bigger deal.
So broadly speaking, if you're a long-term investor, do you stick domestically in terms of your investments, or do you look overseas?
I think we have to spread ourselves out a little bit. The last couple of years, the U.S. has outperformed by in a dramatic way. But I think now we've seen an outperformance of several areas like emerging markets, even Europe, over the last 2 or 3 months. That could continue as we move into the new year. So I think that, I'm not saying people should just leave the U.S. behind, but we are starting to see some bright spots in other parts of the world. So if you broaden your horizon, I think you'll do much better in 2020.
Matt Maley with Miller Tabak. Thanks, Matt.
Thank you.